Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, October 1st. Stocks traded in a roller coaster fashion before settling with a modest loss on Wednesday as investors digested uncertainty surrounding the government's financial relief plan, a disappointing manufacturing reading, and news that Warren Buffett is making another major investment. The S&P 500 fell as much as 2.2% at its low and climbed to a gain of 0.1% at its high before settling with a loss of 0.5%. Helping the market pare its losses was word that Warren Buffett is investing $3 billion in General Electric. GE announced late in the afternoon that it will raise at least $12 billion in a public common stock offering and is selling $3 billion in preferred stock, yielding 10% to Warren Buffett's Berkshire Hathaway. Berkshire will also get $3 billion in warrants, granting the option to purchase GE at $22.25 per share within the next 5 years. GE's move to shore up investor confidence came after its stock fell as much as 10% earlier in the session. Financial market relief plan negotiations are ongoing. According to reports, the Senate is going to vote on its version of the plan this evening. The Senate version is said to include provisions for an increase to the FDIC's deposit insurance limit and tax breaks for business and alternative energy. It's unclear if the House of Representatives supports the plan. In economic news, manufacturing contracted by a larger than expected amount in September, although it does not necessarily mean the broader economy is contracting, according to the Institute for Supply Management's national survey. The ISM Manufacturing Index fell to 43.5 from 49.9, its lowest level since October 2001. The Prices Paid Index, which includes energy and food but excludes crude oil, fell a sharper than expected 23.5 points to 53.5. Private non-farm employment fell by 8,000 in September, according to employment services firm ADP. Economists expected a drop of 50,000. The better-than-expected report had a limited impact on the market, though, as the ADP data has had a spotty record compared to government data. The government employment report, which includes both public and private non-farm payrolls, is set for release on Friday. A decrease of roughly 100,000 jobs is expected. August construction spending was unchanged month over month, which was better than the expected decline of 0.5%, although the market paid little attention to this report. On average, construction spending has declined 0.3% each month in 2008. In commodity trading, crude oil futures fell 2% to $98.61 per barrel, and gasoline fell 3.7% to $2.37 per gallon. The government's weekly energy inventory report showed a larger than expected increase in crude inventories and an unexpected increase in gasoline stockpiles. In the end, 4 of the 10 economic sectors posted a gain today, led by financial stocks, which were up 2.2%. Industrials, down 2.6%, were the main laggard following the weak manufacturing data. Technology, down 1.1%, also faced selling pressure. Interestingly, IBM dropped 6%, the most in 3 years, on market speculation that the company was going to issue an earnings warning. Treasury prices rose across all terms as investors remained concerned about the credit markets. The benchmark 10-year note rose 24 ticks, setting its yield down to 3.73%. I'm Pat O'Hare for Briefing.com. Thanks for listening and have a good evening.